The broadcast is now starting. All attendees are in listen-only mode.
Good morning and good afternoon, ladies and gentlemen, and thank you once again for joining us for another Wednesday webinar. We apologize for the time delay, but we do value your time, and we appreciate you guys taking the time out of your busy day to meet with us today. We really enjoy doing this for you guys, and I feel that you will definitely find today's topic extremely helpful. Today's topic is Inner Circle Selling Secrets, and we're going to show you how to overcome one of the biggest obstacles when selling DI, that dreaded price objection. We're going to walk you through a scripted tool that's going to show you how to overcome and break through those so we can help you increase your sales. Today's presentation will be given by our Business Development Manager, Mr. Ben Coleman. Ben's been with DIS for 5 years, started as a member of the sales team, and due to continued company growth, moved into the position of Business Development Manager. A couple of things before we start. We can't hear you, so if you do have questions, please just type them into the box on the right side of the screen, and time permitting, we'll answer them at the end of the presentation. Well, let's get started. Without further ado, I'd like to introduce our Business Development Manager, Mr. Ben Coleman. Ben, take it away.
Hey, Lee, thank you very much. I appreciate that. Folks, good morning, good afternoon. Thanks for being with us again. As Lee mentioned, sorry for we got a little bit of a late start, so I want to jump right into it. But as Lee pointed out, folks, today is DI Dan's Inner Circle Selling Secrets. So for the next 25, 30 minutes, I'm going to do my best to give you a sales idea that you guys can take out and use in the field today. So let's get started. First off, folks, I've got a sales idea right off the bat. Paycheck protection. That's really what we're doing, folks, when we're selling our clients disability insurance. Don't tell them what it is. Tell them what it does. Am I right, folks? What we're doing with disability insurance is protecting their paycheck. So there's your first sales idea right there. When you're talking to your clients about DI, I want you to use that term. Let's speak in their vernacular. Let's talk and let them what they're going to understand, what's going to make sense to them. So there's your first sales idea right out of the gates. Call it paycheck protection. Okay. Secondly, folks, I need you to explain and emphasize how real the risk is of becoming disabled. Because, folks, the risk is real. The likelihood of you being disabled is much greater than you think. And let me show you some statistics, actually, to back this up. Did you know that the chance of missing at least 90 days of work due to disability is just under 1 in 3? Now, let's compare that to some other risks. The chance of actually using your homeowner's insurance, 1 in 20. And the chances of using your car insurance, 1 in 15. So, folks, this is a great way to emphasize how real the risk is. Again, just look at that. The chances of missing 90 days of work due to becoming sick or injured is just under 1 in 3. Now, remember these odds of loss, folks, because we're going to touch back on these later on in the presentation. Okay, well, again, we all know that a disability can cause financial hardship. Well, why is it, do you think, that agents fail when it comes to selling paycheck protection or disability insurance? Well, we believe there's 2 reasons why. 1, the lack of the needs-based selling approach. And secondly, as Lee pointed out earlier, overcoming the price objection. Folks, there's no doubt that DI can be an expensive form of insurance, more expensive than life insurance, but what I'm going to show you today is that it's affordable and it's very important that your clients have paycheck protection. All right, so first off, let's address these 2 reasons why most agents fail when they're selling paycheck protection. Again, like I said earlier, folks, disability is more common than you think. It can happen to any one of us. I'm sure all of us know somebody that's had this happen to them in the past, some type of financial hardship caused by a disability. Well, the needs-based selling approach, folks, this is what I want you to do, and this is how you do it. You do it by using actual statistics and facts. We're going to emphasize how real this risk is by showing them statistics. Here's some good ones right here. Let me start out with the first one. This one you can have a little bit of fun with, folks. You can actually make it almost like a trivia question. What I want you to do is pose this question to your prospect or to your client. I want you to ask them if they know what the largest minority in the United States is today? And pause for a second. Let them think about it. This was posed to me about a year ago, and I didn't know the answer to this, but I'm here to tell you right now that the largest minority in America is the disabled. Now look at this. According to the U.S. Census Bureau, over 51 million Americans are classified as being disabled. Now that's from the May 2006 census. I'm sure we just did our census this year in 2010, or last year. That number is actually probably a little bit higher. But folks, use that. Use this statistic. The largest minority in our country is the disabled, over 51 million Americans. Secondly, a disabling injury occurs every 2 seconds. Now that's an amazing and almost staggering statistic. And then finally, 3 in 10 workers entering the workforce today will become disabled before they retire. Again, that's a very important stat. 3 out of 10 workers going into the workforce or already in the workforce will be disabled before they hit retirement age. Folks, these are just 3 stats that I have right here for this presentation. I want you to know that we have hundreds of these statistics. And actually, we have a great PDF we put together, which we call our DI Statistical Power Pack. So if you're interested in more stats, we can provide you with this nice one-page PDF. You can call us as soon as this webinar is over. Ask for Lee, ask for myself, ask for anyone on the sales team. Let them know that you want the DI Stat Pack. We can send that out to you folks because I want you to bring this stat pack with you when you meet with your clients and anytime you talk about paycheck protection. You have to emphasize the risk. Okay, so that's the needs-based selling approach. Second, overcoming price objection. Now there's a couple different ways we're going to do this. The first way is all about the presentation, something very simple that you can do and that I want you to do every time you present a disability quote. And it doesn't even have to be disability, folks. I'm going to show you an approach that you should use anytime you're selling to your clients or prospects. Anyways, here's our example. On the right-hand side of our screen, we have an illustration from one of our carriers, the Standard, one of the many carriers that we represent here at DIS. This is the summary page. And when you receive it, this is the way you're presenting it to your client. Well, I'm here to tell you this is the wrong way to present it. And why do I say that? This is why. Look what we're showing, a $5,000 monthly benefit for DI. And that sounds like a lot, right? $5,000 a month? Okay. And it might be for some people. Look what else we're doing. We're showing them the net annual premium. So right off the bat, on our summary page here, we're presenting $5,000 monthly benefit for $24.49 of annual premium. Now, just looking at this, folks, if I'm a client or I'm a prospect, this is not aesthetically pleasing to the eye. I see $5,000 and I see $2,500. So in my mind, if I'm a client or I'm a prospect and I'm thinking, I got to pay $2,500 and all I'm getting is $5,000, granted, that's $5,000 per month. So let's show them what the actual value of this contract, of this policy is. How much of my paycheck am I actually protecting? This is what we want to do, folks. We want to show them the biggest bang for their buck. How do we do that? Very simply. Pull out your calculator. Pull out your cell phone, your iPhone, your BlackBerry, whatever it is. Let's do some simple math. Okay, here we go. This is the correct way to present your proposal next time you get it. As you can see, we've got that $5,000 a month circled. We know our client's 35 years old. We quoted this particular quote of a benefit period to age 67. So if that client were to become disabled tomorrow at age 35, they could ultimately be protected for the next 32 years, all the way to age 67. 35-year-old, benefit period to age 67, that's 32 years of coverage, right? So let's take that $5,000 monthly benefit and let's multiply that over the next 32 years. So what do? Very simply, take your $5,000 per month, multiply that times 12 months, 1 year. That's going to give you 60 grand, and then multiply that times 32 years. Now what are we protecting? Look at this, folks. That $5,000 monthly benefit over the period of 32 years, $1.9 million, just over $1.9 million of tax-free benefits. Now, why is that tax-free? Because the client's usually paying for it themselves. If they're paying for it out of their pocket, you're looking at a tax-free benefit. If for some reason the employer is paying for this policy, offering this benefit, then it would be a taxable benefit. So they're going to get you one way or the other. However, more often than not, the individual is going to be paying for it themselves, so it's a tax-free benefit. Again, so let's emphasize this. It's not just a $5,000 monthly benefit. It's a contract that they could potentially protect or receive up to $1.9 million of tax-free benefits. Take your Sharpie, take your pen, write that across this summary page. Next step, one step further, that annual premium, I want you to take that and divide it by 365 days. I want you to show it on a daily cost basis. So you take your $24.49, divide it by 365. Look at this. For $6.71 per day, you are now protecting, or you are now showing a value of $1.9 million. So that's huge, folks. And that's something you can do. It's very simple, as I said, and it's all about the way you present it. That's one of the best ways to help overcome that price objection. Next time you see this summary page, try that. Use that method. And like I said, it doesn't just have to be for disability insurance. It could be for whatever you're selling. Always show the highest value at the lowest denomination of cost. Okay, folks. Well, those two tips were good on how I feel you can help build your block of DI business. Again, call it paycheck protection, use statistics, and overcome that price in very simply by doing that math that I showed you. Well, I'm going to take that all a step further right now, and I'm going to show you the wealth preservation plan, which we've created, and that I want you to use next time you're meeting with your client and you're discussing paycheck protection. Here are the secrets to the wealth preservation plan. Very simply, I want you to do this. Ask your client, have you ever had a wealth preservation plan prepared? And they'll probably look at you and not know what you're really talking about unless they've, it sounds something like what a financial planner would do for you. But more often than not, they're going to say, no, I'm not sure what a wealth preservation plan is. Well, it's very simple to do, and it's critical to protecting their assets. The worksheet that I'm going to show you only takes a few minutes to fill out, and it's going to determine if your clients are currently protecting their property and their assets. Is it currently being protected adequately? It's a simple worksheet. Here it is right here, folks. And let me walk you through it. This is what I want you to do next time you're meeting with your client. And we can provide you with this sheet. Actually, I'll let you know, about an hour after this presentation, folks, keep your eyes peeled, check your email, because the article that we send on the wealth preservation plan will have this worksheet in it. So we can send it to you. But, I mean, this is something you can do on a piece of paper, a napkin, whatever it may be. I just want to show you the gist of it. I just want to show you how it works, the concept behind the wealth preservation plan. So you're with your client. You write your client's name down at the top of this worksheet. Our example here, we're working with Johnny Appleseed. We know Johnny's 35 years old. Put that at the top of our page. We then ask our client, or ask Johnny, how much is, but if not, ask them, okay, well, what's your annual income? In this example, Johnny's making $100,000. Well, Johnny's 35 years old, as we pointed out. We want to ask him, how much longer is he going to work until he retires? More often than not, your client will probably say, well, I'm going to work until Social Security kicks in. Right now, that's age 67. So again, we're back to our example where we've got 32 more years of work ahead of us. Well, if he's making $100,000 a year, and I multiply that times 32 years, that's $3,200,000. Now, folks, that's barring any raises. It's not taking into consideration inflation. Just for our simple example, we're going to show that over the next 32 years, he could earn $3.2 million. Okay. Now let's go down to our worksheet. I want you to list all the assets that your client is currently protecting. So if they have a home, if they've got cars, if they've got a boat, maybe they've got a jewelry collection, gun collection, stamp collection, whatever it may be, whatever they're insuring, whatever they're protecting, I want you to find out what the value is, how much they're paying to protect it, and break it down on a daily cost basis. So in our example here, Johnny's got a home. Let me start with the cars. He's got a couple cars. The value of this is $65,000. He's paying $1,200 annually to protect or insure his cars. That breaks down to $3.28. So we do that with our next asset, the home. He's got a nice home, $450,000 value. Homeowner's insurance, $1,000, $2.73 per day. For the toys, he's got a boat worth $30,000. Protection cost $720. Break that down to the daily cost. He's paying $1.97 a day to insure his boat. Okay, so these are our assets that Johnny has that he's protecting. Let's add up the value. Look at that. Those assets add up to $545,000. He's paying $2,920 per year, which equates to about $8 a day, $7.98. So we've entered all of his assets and how much it costs to protect them. Now what do we do? What's the next step? Well, you've made these observations that he's currently protecting the car, the house, and the boat. I want you to ask him this question. Does this include all of your assets? What's the answer to this, folks? The answer is no. You're not protecting the most important asset, which we all know is the ability to earn an income. It's that paycheck that we talked about, paycheck protection. So he's currently not protecting it, right? Well, what's the next step? We obviously want to show him what he's going to qualify for and how much it's going to cost. It's exactly what we're going to do. Remember at the top of our page here, folks, I said over the next 32 years, he could potentially earn $3.2 million. Now that is certainly an asset. So we're going to put that under the value, right below the $545,000 of the other assets he's protecting, $3.2 million, right at there. Now look at it, folks. Add those assets all together. Your total assets are now $3,745,000. 85% is the paycheck. So that's huge right there, and I want you to be able to show your clients this. So write that down, put it on your worksheet. Next step, I want you to make an agreement of understanding. Now, this is very important, folks. Remember this. Make an agreement of understanding with your client. Why is that? Because this is what you're going to do. You're going to point out to your client, your prospect, that as you can see, you're protecting only a small portion of your assets and you're ignoring the biggest. I do have a solution for you, but not everyone qualifies. What do I mean by that? Is that a true statement? It most definitely is, folks. Not everyone is going to qualify for disability insurance. There are some that are going to get declined. There's several reasons for declinations. Could be age, could be the occupation, could be health issues, height and weight, whatever it may be. I'm here to let you know, and most of you probably already do know this, that not everyone's going to qualify for DI. But you may, and you do have a solution. So before I show you the solution, I want you to promise me one thing. Promise me that if my solution doesn't make sense, you're just going to tell me no. Very simply put, you're asking your client, your prospect, to tell you no after you do this presentation. Now, as salesmen, salespeople, no is not the answer we're looking for. But folks, I promise you, after showing them this comparison, if it doesn't make sense, or if they tell you they want to think about it, they're not going to buy, and you don't want to waste your time. You want to go on to the next prospect, the next client that's going to see how valuable your presentation is. So ask them that. Let me know if this doesn't make sense. Tell me right up front. Tell me no. Okay, let's calculate the premium. Well, how much is a DI policy going to cost? Folks, typically in our experience, we can insure 60% of somebody's gross income for about 2.5% of what they make. So let me say that one more time. 60% of somebody's gross income, in our example here, $100,000, that would be $60,000 a year. We can insure $60,000 a year for about 2.5% of what they're making. So what's 2.5% of $100,000? That's $2,500. So I want you to use the 2.5% figure, and I want you to feel comfortable using that. If for some reason you're not, use a little bit higher. Use 3% of their annual income. But by using the 2.5%, as I mentioned, your annual premium for a DI policy is going to be right around $2,500. Now that's going to protect 60% of that $100,000, which was $60,000 a year, $5,000 a month, for $2,500. Now, folks, what have we been doing throughout this presentation? We're breaking this down on a daily cost basis. So take that $2,500, divide it by 365 days, $6.84 to protect 60% of that paycheck. let's go back to our chart, folks. This is where we're going to plug in the numbers. Go to the bottom of your sheet. Right next to the value of the paycheck, which was $3.2 million, we plug in how much it's going to cost to protect 60% of that. And folks, let me reiterate something. Let me point something out. 60%, that's the gross paycheck. We all know we don't live on gross income. We live on net income, take-home pay. So when I say 60%, that's actually going to be closer to, say, 80, 82% because, as I mentioned, we live on net or take-home pay, not our gross pay. Okay, so we've got the $2,500 annual premium. We show our daily cost, $6.84. Now look at this last column here. Remember at the very beginning of our presentation today, I talked about the odds of loss, the chances of actually using your homeowner's insurance, your car insurance, and the chances of becoming disabled for 90 days or more? We're plugging those right in here to this worksheet. We're going to help emphasize how real the risk is. Again, back to that, selling the need. So your chances of using your car insurance, 1 out of 20. Your home or your boater's insurance, 1 out of 15. But the chances of becoming disabled for 90 days or more, 1 in 3. Plug that in. Now look at that, folks. Your largest asset, 85% of their assets here, the paycheck, which is $3.2 million, which they're not currently protecting, you can protect that for less than what they're currently paying to protect their home, their cars, their toys, their boat, whatever it is. So this is a great presentation, folks. I want you to use this the next time you're talking about disability or paycheck protection with your client. Okay, so we filled in our amounts. Folks, let's recap this, as I just kind of did. For $8 a day, they're protecting $545,000 of Johnny's assets. For $6.84 per day, we're going to protect that paycheck. That would be a $3.2 million gross over the next 32 years. So this comparison really, first of all, it sends the message that DI can be an affordable insurance. And not only that, it should make sense to the client. If it doesn't make sense, remember, folks, I said make that agreement of understanding. Just tell them, have them tell you no if it doesn't make sense to them. Okay, so we're going to close the sale. Well, I want you to ask your clients, can you see any reason why you wouldn't want to protect 85% of your assets? Wait for their response. Folks, if the client, if they're still persistent or a little bit, if they're still hesitant and not quite sure, remind them. If they continue to resist, I want you to use the stats again. Here's another good one. At age 32, the chance of being disabled for 90 days is 6.5 times greater than the chance of death. And 17% or 1 in 6 families experience disability. So, folks, ask for that sale again. I can't emphasize enough with these stats, folks, and that's why I want you to get the stat pack. But anyways, once you do this, once you show them the stat pack, ask for that sale again. And all you need from them is their authorization to see if they qualify. You've got the application with you. Fill out the application. Let's see if they qualify for DI. All right, folks. Well, in summary, I'm going to try to wrap things up for you. Establish the chances of being disabled. Again, I just want to reemphasize how important that is. The needs-based selling approach. And then overcoming price objection. The first example I showed, folks, all about the presentation. When you receive that quote summary page, show them the biggest bang for the buck. Always show the highest value at the lowest denomination of cost. And then I want you to use the wealth preservation plan, the WPP. I showed you the secrets, all about comparing the daily cost of paycheck protection to those other insurance protections, the home, the car, the boat, whatever it may be. Something I didn't touch on, folks, but it's another great way to overcome price objection, a little bonus sales idea for you, is offering a multi-life gender-neutral discount to employers. And it doesn't even have to necessarily be employers. Folks, if you've got 3 or more lives of people working for the same company, I can get you a discount, a gender-neutral discount. That's going to be some significant savings, especially for females in the DI industry. Unlike life insurance, females are more expensive on DI. So keep that in mind. Multi-life discount, folks, 3 or more lives. And there's actually a couple carriers that'll do 2 or more lives to get you a discount. So it's another great way to help overcome price objection. That pretty much summarizes it, folks. I did my best to get through. Hopefully you found that to be informative and you can use that WPP. I want to show you a snapshot of our website. If you've not been there, folks, I highly encourage you to check it out. If you're on the internet today, surfing the net, go to diservices.com. It's very user-friendly for you, the agent. You can request quotes, get sales ideas, register for future webinars, listen to old webinars that we've done. Maybe you've missed some that you want to get caught up. I highly recommend checking those out. We will put this one on there as well today. Plenty of different things you can do on the website, get applications, whatever it may be. Folks, and I also encourage you, anytime you want, give us a call. We're definitely here for you. We want to help you out in any aspect that we can when it comes to disability insurance, paycheck protection. We've got our sales team, we've got underwriters, we've got marketing team. Let us know what we can do for you. So jot down the number if you haven't already. Check out the website. I'm going to see if there are any questions from today's presentation. While I'm doing that, I'm going to pass it over to Lee real quick. Go ahead, Lee.
Hey, thanks so much, Ben. Great job. And folks, as always, we appreciate you guys meeting with us today. We hope you did find this information helpful. And as Ben mentioned, keep your eyes peeled in your inbox. You will receive a copy of the WPP presentation scripted, so you'll get it word for word. So when you're sitting down with your clients, you'll have that, and you can have it ready and overcome those price objections, as Ben mentioned. Our sales team is standing by. We do guarantee 24-hour turnaround for quote time. So as Ben mentioned, if you have any questions, risk inquiries, please just give us a call. We're here to help you in any way we can. Please join us next Wednesday, where we will be sharing our broker computer-assisted marketing, a new cutting-edge technology tool that we've created. Basically, it's a lead generation tool for you guys, our brokers. And I don't want to give too much away, but I would definitely encourage you guys to join us next Wednesday, where we'll talk about an e-blast tool that's a lead generator for you guys. And we're looking forward to talking about that with you guys next Wednesday. Ben, any other questions you want to address before we sign off?
Yeah, Lee, thank you. I can't, and folks, Lee's right. A good webinar is going to be next week. It's that broker computer-assisted marketing. If you haven't heard about that yet, please join us for that one. You're going to love that. That's all about helping to generate leads for you using technology that we've created. A couple quick questions before we sign off. Marty was asking when I was doing the presentation, was that annual income net or gross? And I'm glad, I hope I pointed it out. That was gross income. And as I mentioned, we don't live on gross income. We all live on net income, our take-home pay. So that's important to note when you're talking about paycheck protection to your clients. And then finally, another good question here from Marty. Are rates locked in after enrollment? The answer to your question is yes. If it's a non-cancelable policy, folks, if it's non-can, then your rates are guaranteed for the entire length of that contract. As long as you're paying your premiums on time, your premiums will not increase. Those are non-can policies. There is a renewability provision with some carriers out there called guaranteed renewable, where the provisions of the contract are guaranteed to be renewed, but there is verbiage that states the carrier does reserve the right to increase premiums. Folks, I'm here to tell you, we usually don't ever see carriers increase premiums on existing policyholders. I want to say the last time it was done with one of the carriers we represent was over almost 40 years ago. We don't see that because state insurance boards don't want to see insurance companies raising rates on existing policyholders. So what do? They usually just come out with a new product. So a guaranteed renewable policy, folks, it is still very strong, but keep in mind there is legal verbiage that says they can raise the rates. And it wouldn't just be for your client, it would be for everyone in that occupational class. And as I mentioned, it's got to get approved by the state insurance board. So I'm confident in saying your rates are going to be locked in, especially with a non-can policy. You don't have to worry about that. Libby, will you send a notice about next Wednesday's seminar? We definitely will. Keep your eyes peeled for the registration for next week's. You can always go to the website too, folks, and register and see which ones are upcoming, and it'll send you a reminder too if you register. So yeah, next week's going to be great, folks. Let's see. Again, Rosemary, we can give you guys some more information if you want to give us a call today. If you want to get a head start, I guess you could call it, on the BCAM, we can send you a little article on that. Anybody that's interested on the call today, if you're interested in that lead generation program, give us a call. Write down that 800 number and talk to anyone in our sales team or Lee or myself. We can help you out. Libby, another great question. Once on claim, does the premium cease like long-term care? Does the client still have to pay the premium while on claim? All of the carriers we represent, folks, have what's called waiver of premium. So once they're on claim, if they go on claim, once they fulfill the elimination period, which typically is 90 days, but it can be 60 days, 90 days, 180 days. After you've fulfilled the elimination period, the premium's waived, so you no longer have to pay that. Great question. Folks, I appreciate it. I went a little bit over today, but hopefully you enjoyed it. I enjoyed having everyone on the line, as always. Give us a call, folks. Anything we can do for you, we appreciate your business. We're here to help you out. On behalf of Lee, I'm going to sign off, and I hope you all have a wonderful work week, and we'll talk to you next Wednesday. Thanks, folks.